Well,
So I'll go ahead and start. My name is Atul, and I'm with a company called Whole Energy, as my shirt says. And I going to be talking a little bit about kind of a, otherwise a boring topic, but in our industry it's a pretty interesting topic because pricing is a boring topic in most industries because in most industries pricing is a relatively transparent thing. In our industry it's an extremely obfuscated thing, and because it serves the interests of the stakeholders with biofuel. We'll get into that in a minute. We'll have some fun doing it. But first I want to ask get people to raise their hands, and nobody's allowed not to raise their hand because it affects what I present. So I'm going to be maybe a little bit more frank, a little bit less frank, depends on who's in the room, to be honest with you. So I wonder if, is there anybody here who's from a major oil company? Anybody from a petroleum distributor? Maybe, sort of.
He's a researcher, don't worry about him.
Is there anybody who's a biodiesel producer or retailer, small retailer?
Only if that makes you more frank.
I'm a distributor. I'm a distributor in Texas, you know.
Yeah.
Retailer.
And service providers? And then interested parties just in biodiesel in general. Okay, it's good to know. All right, well, I'll take a little bit of a risk. Sounds like I'm not too exposed. There's no BP pricing people in here. It's a very delicate subject. I've been in forums with pricing people from the majors, and man, they have a cow when I talk. And we'll get into that. We'll get into that. So a little bit of background on Whole Energy. Whole Energy actually was, don't want to get in a fight, but one of, if not, we were the first ASTM producer in the state of Washington. And when we and Dan got some of our first product, and when we got started, our goal was the standard vision of a regional collection, regional production, regional distribution, regional everything. You know, what happened shortly after we got started, around 2006 timeframe, several groups, particularly in our region, raised a huge whack of money, and it seemed to me that they're going to build really awesome plants. So we got scared, and we did the research. And the research meant the history of the petroleum industry. And I read a lot about Standard Oil, and certainly they don't have a lot of respect for the practices, but you have to pay attention to what's happened historically. And one of the biggest lessons that we learned, and our strategic advisory board to get the company going, was that distribution was key. It made the difference between Standard Oil winning. Of course, they cheated too, but just plain old distribution, it was a good game strategy, getting control of the market channels. And if you look at the history of the evolution of the fuels industry, you'll discover that unfortunately it's not production technology or production that has decided which way we go. It's more who controlled the pipes. And that's true in a lot of industries, but particularly true in the fuels industry. And so we decided to start shifting our company more towards a distribution company. We continued to produce less and less and less every year for several years after that, but we set up a terminal, first in Anacortes, right next to 2 refinery terminals, and we set up a terminal in next one was in Richmond. Then we set up a terminal in Tacoma, and then LA. And now there's been a lot of news on our terminal that we've set up in Portland. Now, Whole Energy terminals are not like Chevron terminals. They're cute. But they're in a good location, which is what matters. When people buy biodiesel, they don't want to have to buy biodiesel and have to drive their tractor-trailer rigs out of their way to a typical biodiesel plant. There are a few biodiesel plants that are really well located. For the most part, biodiesel plants are not well located for distribution. And even then, they're not typically set up for handling every kind of truck that comes in and out, providing the support and service for that aspect, providing blending, which we have at several of our facilities, meaning ability to blend with diesel. And so, because of all of those things, there's a hole to be filled, albeit at a very thin margin, but that's the nature of the fuel business. You do the hope is to do a lot of volume. The way we ended up achieving volume is by growing multi-regionally, because unfortunately the biodiesel business is still a pretty small business. So the only way to achieve market penetration into the obviously we weren't going to compete with BP or Chevron in terms of high blend B5 type of, low blend B5 type of terminals. So we focused on higher blends, and of course those volumes are smaller. So that's required that we reach out and create destinations. So that's why we're now in all of these locations: LA, San Francisco, Portland, Tacoma, and Anacortes. And a second tangent that we went and pursued was glycerin, but I'm not going to talk about glycerin. It has nothing to do with this presentation, but I just wanted to mention that. So I wanted to present because I feel like a lot of people who are upstream means closer towards production. When you talk to petroleum distributors and you talk to people in the petroleum industry or even end users, fleets and all that, you don't necessarily get accurate or honest information about pricing. And I'm not going to be able to give you true information of pricing, but I'll take a snapshot. I'll be able to help you figure out how to figure out where the market is really at and what the market is like. And that's all I intend to do. And then hopefully that will, people who really need to sell biodiesel will be able to discover that for themselves. So with that, first I need to this is basic, but it's important for me to make sure everybody understands. Biodiesel typically, the process that it flows through is one of three pathways. Biodiesel, when it's produced, goes directly to petroleum distributor's truck. Meaning, in the state of California, there are 7,000 gallon trucks. In Washington, Oregon, there's 10,000. Idaho, there's 10,000 gallon trucks. BC, there's similar sizes. And these trucks that hold this many gallons are typically what hauls fuel. And a lot of people in the biodiesel industry have, one of the mistakes that's been made, by the way, is that they've tried to buy their own trucks and their small trucks. And one of the things about trucking is it's easy to it ends up becoming extremely expensive if you have to haul the product more than a few miles. So anyway, these trucks, what they do is typically biodiesel gets blended. So they load typically diesel or sometimes they do load biodiesel first, but typically they load diesel first. They come to a location where there's biodiesel, they load it, or they blend it at the place where there's biodiesel, and then they go on their way to a retail station, a public fleet, or whatever they. And typically, if there's multiple small tanks, they'll do a milk run and do multiple drop-offs. Again, trying to make the delivery efficient. The other major pathway is biodiesel. Typically, that gets shipped by rail car, but sometimes by truck, from biodiesel producers directly to a petroleum terminal. Petroleum terminal means, for example, at the Chevron refinery in Richmond, there's a terminal. Every major refinery in America has its own terminal. And then there's secondary terminals at the end of pipelines. For example, there's a pipeline that goes from Portland to Eugene. In Eugene, there's a terminal there as well, because it's at the end of a pipeline. Any place a pipeline terminates is a major terminal. And then, of course, the third pathway, and the smallest of those pathways, is direct distribution. And in general, this is a pathway that supports high blend end uses. Direct distribution, meaning sometimes a little bit smaller truck that's coming from a producer directly to a retail outlet that's typically has smaller tankage and can only accommodate a few thousand gallons of product. When you sell biodiesel, you're not just selling, unfortunately, no matter who's in the biodiesel, even at a small scale, because the EPA has created a very substantial regulatory environment around biodiesel as a renewable fuel, you're not just selling physical product. You're not just selling the liquid. Whether you pretend you don't know about it, or you're part of a system and a set of national regulations in the United States and slightly different regulations in Canada. You're part of a system which requires that you recognize that you're selling, yes, mostly methyl ester, but also attributes of that biodiesel that are required to be tracked and monitored by the EPA. And There are two of those, and are RINS. RINS are federally mandated through the EPA, and the other physical attribute, not physical attribute, but attributes are the life cycle carbon attributes that are relevant in the state of California. That program is called LCFS, and that's regulated by the Air Resources Board. And why that's important to a pricing discussion is that those attributes have financial value and are recognized as such. Until very recently, the California low carbon fuel standard credits were not valued, but Whole Energy just sold a block of credits, so I guess that they are valued. I don't believe it unless I see it, so we saw it, and assuming next week we'll get a check. If we get that check, then it's really real. But so that was background. I want to make sure everybody. Are there any questions about that? So one way to imagine that is imagine your container, any container of liquid. Okay, and this is a tool that I use all the time for visualization. It's full of you have a quart jar, let's say, and you've got so much biodiesel in it. Just imagine on top of that, you've got so many RINs, 1.5 RIN per gallon. So if you have, let's say, 100 milliliters of biodiesel, you've got 150 milliliters equivalent of RINs. I guess that would be it's really done by the gallon, so I should say if it's 1 gallon, I shouldn't say quart. If it's 1 gallon, you have 1.5 RINs with that, and you have low carbon fuel standard credits also associated with that. But that depends, unlike with biodiesel and RINs, low carbon fuel standard credits are based on how you made that biodiesel and what raw material you used to make it. For example, the closest plant to here, I believe, is New Leaf in San Diego, and they get about 12.
I hurt my feelings until, by the way.
I'm sorry. So your plant is the closest. What's your carbon intensity?
We actually have a non-cooked and a cooked value. So I think it's 11.74 right now. We've got
so about 12.
Yeah.
And the other
I think
one.
we've got it's going to be at 474, something like that.
Yeah, I think it's another 4. So it's about 16.
Yeah.
So there's a 12 and 16 carbon intensity, and that actually the units there actually are physical units for that. It's grams of CO2 per megajoule, which is something that we all know.
Configure
It's a very practical, get up in the
process.
morning kind of number. So, but just as a reference point, they evaluate diesel as being 95 grams of CO2 per megajoule. So it's better. That less is better. But if you had, for example, a soy biodiesel in your jar, then it would be 80 grams of CO2 per megajoule. And just so you know, these are highly, perfected based on people with PhDs who must be incredibly intelligent and always agree with each other. In Oregon, another group of people have, with the same kind of, lab coats, have come up with soybean 20 grams of CO2 per megajoule, and recycled being around 10. Another interesting thing we learned is that we bought some product from a REG plant in Illinois, and it's Seneca, Illinois, and that plant has 4. And I'm not sure the infinite wisdom of CARB, but apparently railing in a rail car product from Illinois is 4.
Based on edible corn oil.
It uses an edible corn oil, yes. Yeah. But I worked for Ford Motor Company for many years, and when we were internally trying to motivate environmental vehicles, we looked at life cycle analysis, weld the wheels and all that kind of stuff for different kinds of powertrains, hybrids, fuel cells, all those types of things. And it didn't take me long before I realized this is a very limited tool. And we use it almost now in biofuels and environmental activities. We depend on it extensively, but it's really not a robust tool. But it's what we use, and it affects pricing because these things have numerical value. I would like to switch to a really entertaining video, and that's not that girl. It's below that. You gonna get this?
Like to buy some biodiesel.
What is biodiesel?
It is a renewable fuel made for diesel engines. It is similar to diesel fuel, but made from plant oils and animal fats.
Oh, so what is biodiesel?
How many have seen this?
Biodiesel can be blended with regular diesel fuel to improve the performance and lifetime of your engine.
Oh, so what is biodiesel?
Biodiesel is fuel produced in the United States to eliminate the need to import oil from other countries. It is like diesel, but produced in our country.
Okay, I guess.
Biodiesel is a clean burning fuel that lowers emissions and reduces particulate matter. It is better for the environment and your health.
Wow. Biodiesel sounds great. Give me some.
What kind do you want?
What do you mean?
What kind do you want? Soybean-based biodiesel, waste oil biodiesel, animal fat biodiesel.
What?
Tell me your cloud point.
What?
What blend are you using? B5.
What the hell are you talking about? Why are you talking about clouds? I thought we were talking about fuel. Why did you say high five?
I did not say high five, I said B5. B5 is 5% biodiesel mixed with regular diesel.
What? So I can't use biodiesel by itself?
Not usually. Most people use biodiesel mixed with diesel fuel. It is common to use between 5% and 20% biodiesel in engines.
This is confusing. Just give me some biodiesel.
Do you have storage tanks available?
What?
To make your own blended fuel.
I don't know.
Can you buy blended fuel at the terminal rack?
I don't know.
Can you do your own transloading?
I don't know.
Are you registered with the EPA?
I don't know. I thought you said biodiesel was good for me. This is too confusing. Biodiesel sucks.
You do not understand. Let me tell you about RINS.
I hate you. Take your biodiesel and stick it up your ass.
Do you know about the blender's credit? Wait. Let me explain carbon credits. I can help you with LCFS. How about sugar ethanol? Don't you want to be green? The future of the world depends on you.
I mean, and that's, those people who are stuck in the middle, like whole energy, this is what we have to deal with all the time.
What's that video called?
How to sell biodiesel.
link.
Just
Okay,
Google
just
that.
email the link to everybody.
I think that is made by the regular petrol.
So, let's move on here. I wanted to switch now to, okay. So pricing is reported by suppliers, typically not in a very uniform and consistent manner. Most of the producers on the West Coast, small, medium, as well as the Midwestern producers, do not provide pricing in just general open posting. What they do is they send emails to prospective customers. And typically the way they post their pricing is a price of biodiesel with all of the credits attached to it. Unfortunately, nobody who is an end user of biodiesel wants, as you can imagine, wants to deal with that hassle. Nobody wants, why would you want to do a small user station, someone who's at a filling station, or a public fleet, municipal fleets? None of these people want to deal with RINs and credits and reporting and any of that. It's a unrealistic expectation that they have to deal with that. So what happens is that you can't go by the price that although the price of credits is a relatively honest posting that people receive, from a specific producer, it's not that useful. What you really want to know is what is the value of the product with the credits monetized. And there is posting of that kind, and that's typically done by terminal operators and or large petroleum distributors. And they post in a variety of ways, but the two primary well-respected, or it used to be well-respected, resources for posting pricing are Opus, and that's the Oil Price Information Service, which is a fairly significant sized company that's been around long before the biodiesel industry, and that emerged as a tool for having pricing transparency, which does a fantastic job of providing that for petroleum. And Jacobson's, which emerged as a tool for agricultural products, including all the oil-based products, vegetable oils, tallows, and so on and so forth, and also some grain-related oilseed commodities. That's what Jacobson's existed for, and now when biodiesel emerged, it also got is also reported on Jacobson's. But now I'm going to show you the problem with these two, and these are publicly accessible, meaning you can anybody can subscribe to these. You have to pay a little bit of money, but once you subscribe to those, you get daily if you want, or in different markets, all kinds of different subscriptions. You can get pricing information for biodiesel in your markets. So
could I interject that? I would say there's some caveats to that, like the market price is based on like a barge, or it's kind of hard. It can be hard to know whether the pricing that you're seeing is actually going to be reflected when you call every producer in that region and ask for them. I found that to be the case with the Opus anyway. And we were the only person selling it, the only company in Austin selling biodiesel for a long time, still are. So they just called me and said, "What do you sell your biodiesel for? We want to list you in Opus." And they gave us our own name, like we were the terminal, even though we weren't a terminal. So, it's not quite as cut and dry as it'd be nice for it to be.
I guess I'll use this one. Copy and paste it. So, there's a way in Word to do a full screen job. I don't know. Maybe not. So we'll just go with this.
F11.
Is there?
Probably F11.
I think we'll be okay. And what I'm going to do is go through it. For example, this is today's postings, which I got this morning. So we'll just go through an example. Los Angeles is very conveniently right at the top here. And so here we go. This number here, average rack, 517.81 is in cents. Okay. So what this is saying is that of the people who provide information on the LA pricing for biodiesel B100, B100 is a term that typically implies with all the credits in, is 517.81. Now, I've got recent pricing from all of the suppliers, and I'm not going to mention all of that pricing, but I know that that number is a little bit high. That the honest number is probably around 505 average B100, but that is fairly representative. Yes.
Sorry, what do you mean 517.81? Is that $5?
That's cents. Yeah, so I explained. It's 517 cents,
And then
0.81 cents.
0.81
Cents, yeah.
Okay.
That's cents.
They just had to do it all confusing life.
Well, remember, when you go to the pump right now, you pay 9/10 of a cent. So you on the base price, most people miss this. You're paying $4.29 for your fuel, right? There's 9/10 of a cent on top of that. That 9/10 of a cent makes a big difference from an industry perspective.
Yeah.
So, credits today. Let's talk a little bit about credits. The when this particular number 517.8 includes RINs, and so RINs are a little bit unstable right now. Well, they've always been unstable. Right now, they're about $1.05 per RIN. So you take $1.05 times 1.5, that's $1.57.5. And you take $1.57.5 and you subtract that from that. Since I know that number's wrong, we'll just say, let's pretend it's 507, and it's about $3.50 is what the effective price of wholesale, large quantity purchase of biodiesel should be. And in fact, when we go down to, we'll do it in a minute because I want to kind of focus on the top here. But when we go down to some of the postings, they'll reflect some of that. And this number here, if this number was right, is approximately reflects $1.57 minus this number. So
Okay, can I mention also, I noticed one says B99,
No, it
the other one
doesn't.
says B100.
that's $1.30. No, I'm sorry, $1.35. Yeah.
Yeah.
So you can see that if it's $1.35, that means there's about this is already about 20 cents high. By this point, it's about 30 cents, 40 cents high.
What I was going to mention is that one says B99, the other one says B100.
Yeah.
I've noticed a lot of producers still want to sell B99 just in case the credit comes back. They want to get the retroactive tax credit.
It's
So-
worth mentioning that B99 also evolved years ago to reflect product that had included the dollar tax credit or didn't include the dollar tax credit. It has started to evolve a little bit to also mean product that's got credits monetized versus product that has credits included. Although you need to confirm that in your buy-sell relationship. You don't want ambiguity, but sometimes when people say B99, they automatically mean they're talking about actually RINless B99.
The top one actually says without RIN. What is that?
Yeah. Well,
The 517 says
and then
without
and cuts quite often stated 517 without RIN, but this really is a with RINs price. I mean, if you have to pay that much for without RINs, you're getting totally screwed. So I'm not sure why they posted that way. And then now we're looking at here. Some of the vendors provided, in all the blends down to B5, B1. And you can see eventually biodiesel converges down to the price of diesel. It's like 330 thereabout. That's where diesel is. A little bit less than that. But you can see that, for example, let's just pick a number here. Let's see, B5, the B5 pricing, for example. So that's B1, B2, B3, B4, B5, 339. So that's about 10 cents, because straight diesel, I happen to know this morning, is about 330. That's 10 cents, fully 10 cents more for 5%. And just to explain what that ratio means, if you're paying 10 cents more for 5%, it's like paying, because 5% is 1/20th, it's like paying $2 more for 100%. And I already told you that biodiesel should be about $3.50, right? So why are you paying, if you buy B5, $3.40 for just B5? Like you've only gotten 5% bio in there, right? That's like for the 5% bio that you're buying, you're now paying $2 more than diesel, $5.30, which, so that means that the blender is making a full $2 on every gallon of biodiesel, which is totally non-standard for what should happen. So this is a problem. Now, I'm just showing you LA, but this is the way it is everywhere we do business. And so why is this pricing so dishonest? Why is this pricing so greedy or dishonest, whichever way you want to put it? And the reason is because this video we saw. Because EPA, in infinite wisdom, has created a system that makes the purchasing of biodiesel so untransparent that we end up having a system where it's possible to create these kinds of postings, and public entities and private users who don't want the hassle of RINs are forced to go off of these indexes that are profoundly dishonest. And what it does is it sabotages the biodiesel industry. The way it sabotages the biodiesel industry is that it makes only people that buy biodiesel, people who, because of internal mission or whatever, have to buy biodiesel. And the end result of that is that people aren't buying because it's actually a better product. People are, because really, if we look at the full financial value of biodiesel, it's pretty darn close to diesel. But instead, most people are paying way too much for biodiesel. Public fleets, for example. Public fleets have to go off these posting systems. And because of their internal governance, they're not allowed to gamble with credits, the way they look at it. So they buy off of these indexes, and they're getting screwed. This is a commercial here. Commercial. There's my commercial. That's a good one too, but I'll just show you here, right here, for example. This happens to be our company, Energy. Honest price. This honest price. I won't name any names, but the reality is that because of what we're doing there, and something I'm really proud about, we're saving the city, because the city of Portland has to go off an average number. So they end up going off of this number. But if we weren't posting in this market, if we weren't distributing product in this market, City of Portland would be paying another 70 cents a gallon. So we still don't have the volume. We actually bid on that contract. We won the contract, but insider politics took it away from us. So that's kind of a little bit, and I can answer more questions about pricing, and if you're curious about it, but.
So you said you're not crazy about all this, I agree. What about Jacobson? I've used it for yellow grease, but never for fuel.
Yes.
Based on what you said have up there, it doesn't make sense to me why B20 costs less at the pump than diesel does.
Well, there are certain locations where that happens. Now, tell me a location where you see B20 less than diesel.
Pearson Fuels in San Diego.
Well, that's because Pearson has been in the alternative fuels business for longer, almost 25 years now. When I worked at Ford, in 94 is when the first Ford-Pearson collaboration on that first natural gas and electric charging station and all that stuff happened. So Pearson is not a typical petroleum distribution company. They're definitely Propel. If you go to Propel outlets, you go to places like Pearson, you go to sequential outlets. In Eugene, the pricing is pretty reasonable.
Depends on they
Dr. Dan.
sourcing it from New Leaf.
Huh?
So they can be getting it right across town.
Yeah, I'm actually new to the San Diego area, and John and I went together to Pearson. We were surprised to see the lower price, and they told us they were purchasing it from New Leaf.
Yeah.
But just, in relation, I don't know anything about the stuff you're talking about. So
Yeah, no,
but
that's okay. But the point is that, there are definitely good examples out there of retail outlets where you can get good pricing. We have a retail outlet in Bellingham where our pricing today is $3.99. We clamped the price. Sometimes we're losing money at $3.99.
Okay. So you think it's just a unique case then?
Yeah, but those, how many of those outlets are there?
Why would you lose money?
And how much of those, because $3.99 state and federal in Washington's about 62.4, so that's $3.37.
No, but when you're hedging the RIN or something like that, why would you?
We don't have the resources to hedge. We don't hedge.
I guess
So $3.37, so that's cheaper than our buy price. But on what happens to be in tank, was around $3.10. But the reason Whole Energy does it, not because we didn't do that thing to make money. We did it because half of more than half, 2/3 of our investors, 2/3 of our employees live in and around Bellingham, and we want to have a place where we can say, go get fuel. So.
And I guess I should ask Pearson this and not you, but I'm interested in how you take your take on it. But if there's an incentive to use biodiesel, people come to Pearson to buy biodiesel. Why wouldn't they at least price match to the diesel too that they're selling it right at the same pump? If they'd make more money, why would they sell it for less?
Well, now you have to ask Pearson that question.
I would also say that there's different philosophies about that. Some people believe that biodiesel should always be more than diesel because it's a premium product made in the U.S. and stuff like that. Other people think,
I would agree with that, but the problem is that what we have is insanity in pricing and price manipulation through indirect collusion, which is a federal offense and criminal offense. So, and it's not so blatant that you can point a finger at it and say this person should go to jail or that person should go to jail. It's very subtle, and so it's not like people are getting in the dark rooms and having pricing control discussions. But what happens. We have an industry who has a vested interest in adding a margin to biodiesel because it ends up subsidizing their it's an industry that's very cynical about biodiesel and is cynical about the credits around biodiesel. So culturally they're biased to move biodiesel. There's very few companies like our company, which is actually biased, and Pearson and Propel. There's very few companies that are actually biased, and of course all the producers. There's very few companies like that, though. In terms of total people moving fuel, we're a tiny drop in the bucket. Really, tiny drop in the bucket.
Well, it's not the only place I've seen it too. In Denver, you know, B20 is pretty competitively priced right now too, and it didn't used to be. I remember when B20 was like $1 more per gallon than
I
diesel.
remember that petroleum was up to $80-some a barrel now.
Yeah.
So when you start looking at blending different products, you're going to end up with different.
But what I'm telling you is that the people who buy diesel buy it off of Opus, pretty much across the country, almost without exception. Okay. So what I'm showing you is that they buy off of those indexes, which are where they get their information. Most people are not you. Most people are that cartoon.
Right.
That's most people. I mean, I'm not saying just 90%. I'm 99% of people are that cartoon. Are people who do not have the energy or the time or the bandwidth to figure out exactly how to get biodiesel at the right price in the right market.
So we are the 1%.
You guys are the elitist 1% that get that, and are smart enough to know where biodiesel, to where you can get biodiesel at the best price.
That was the first time I've seen that chart. How does that translate to the price at the pump? Is that the direct price you're going to pay at the pump? The numbers you saw in there?
Road taxes vary, right? So those are pre-road tax numbers.
And it doesn't include markup, right? You're saying that those numbers, you're wondering if those numbers are reflective of what's at the pump?
Yeah, those are distributor prices, I take it. Those
That's
are
where they
actual
buy
pump
it,
prices.
and then they buy it, and then they tack on state and federal road tax and their distribution margin. And typically in the petroleum industry, distribution from supply point to all the way out to the retail price, margins are 10 to 15 cents. It's very thin, which is really, when you think about it, not a lot of money to have to deal with all of the logistics, filling station interest, investment, and all that stuff. And one can easily argue that the biodiesel is enough of a hassle that a margin that's a little bit more is reasonable, but not $1, $2, which is what we have primarily when you look at Opus postings on and prices.
Crazy.
So when we saw the difference between your price and the other distributors,
Yeah.
can you then specify I want to buy from this distributor at that price? Is that how that works?
If you're a public entity, you can't pick. You have to pick an average. So.
But if you're a private distributor like Pearson, you can go in and say,
Yeah, I
I'll
mean,
buy
when we
that
supply-
product from that person, and they will supply.
Yeah,
that.
we've definitely supplied folks like Pearson and things like that. And I'm not. I just was showing you that it would be kind of crappy if I was telling you how pricing is not honest, and then if my pricing was dishonest too. So I just want to make sure you knew that we are working the talk. But there's of course many people supplying, and many people can buy from other sources. But in general, if you want to buy a product where you get reasonable pricing, you've got to handle all the credit related issues. You've got to handle all the credit related. That's not practical for most people who buy biodiesel. Even people who buy it in large quantities, it's not practical.
Could you actually explain, at the way beginning you had your two prices, one was 5 and one was 3, and they both said with RINS, so I got confused. Could you maybe explain that better?
I probably should find a better example of, in this chart here, in this document, I've got better, that's the, let me go down here and look for a little bit better.
Well, one was B100, the other was B99. That was the only difference I saw.
They both said without RINS. But
I didn't really like that particular example, so I'm going to pick one for the purpose of presentation that's more accurate and so on and so
One number
forth.
has a RIN and one didn't. They were just labeled.
Well, I don't think I think that's directly from Opus, so I don't understand why somebody would post that high for without RINS. I think that's just not the B100 with RINS price that I know from personal experience. I would like to find something like LA again in this posting. Let's see if I can find it quickly. Come on. Here we go.
The only place I go
It's the
is
same.
everything.
Here we go. I think we're about to find it. with RIN.
Definitely. Works better.
Yeah, that also shows with RIN, without RIN 549. I don't know why they don't have any with RIN postings in this document. Just double check on that. The primary tool for Opus is to get the blended numbers with diesel. So as soon as you blend with diesel, the RINs are being monetized, or should be being monetized. The problem is that the value of them is not being correctly reported. So I apologize, but I can't find a good example quickly that would reflect a B100 price, an accurate B100 price. But I will tell you they're hovering right around $5. I mean, plus or minus 10 cents. We'll leave that alone. And by the way you get to that there's also working up to that price. There's a way working down from that price to the market, but there's also a way to work up to that price. So $5. How do biodiesel producers around the country get to a $5 number? Well, the way they get to that is they look at their cost of raw material. Cost of raw material for soybean oil is around 52 cents, and 52 cents on a per gallon basis is about $4 a gallon, I believe. Is that right? 52 times 7.5. It's about $3.75. So 375 plus typically in the case of soybean oil plants that process soybean oil do much larger volume and have a low per unit processing cost. The nationwide average is about 80 cents for all plants for their cost of processing, and on the big volume plants process around 50 or 60 cents per gallon. So what that tells you, if they're 375, then let's say they're processing at around 60 cents. Their cost out the door is about $4.35, and then of course they have to typically railing it out to the West Coast, which most soybean production is in the Midwest, is another 35 cents. It's around $4.70, and then they need to make some margin. 30 cents is an awful thin margin. For a plant that's making a $5 product. I mean, it's a very thin margin with all the capital and expenditures they have and all the overhead that a big plant does. In the case of recycled oil, yes, your oil is quite a bit cheaper. Recycled oil is around 35 cents, and 35 cents times, again, about 7.5, which is a little bit higher of a number, is more like 260. What? 262. Thanks for the help. 262. And typically, recycled oil, you don't get the same yield, and the plants are smaller, so their production costs are more. You've got the same staff for a 1 million gallon or 2 or 3 million gallon plant as you have for a 60 million gallon plant. So typically, small plants' cost of production is around $1.25, $1.50. So we look at that, so it should be 262 plus $1.50. They're, again, somewhere around $4.20, $4.25, and that for them selling into a market around maybe $4.90, $4.80. There's it varies, but there's a little bit of a lower price, a dime or so, for a recycled product over soybean. In some cases, you do see a premium, but in general, it's a little bit of a discount. So they're making 50, 60 cents, where those economics are pretty reasonable. That's kind of where the market is today, and that's why we get the $5 price point. Really, when the blenders credit was in place and RINs were in place, 2011 was a great year for biodiesel producers, small, big, medium. If a producer didn't make money in 2011, they're never going to make money, because it was just an exceptionally good market situation. You had high value RINs, you had relatively reasonable feedstock prices, you had the blenders credit. But this year's a different story. This year, you have to kind of run a relatively tight ship to make money as a producer.
15-minute warnings.
Okay. No, I'm just answering questions now.
Okay, since we have some time, I'm going to kind of ask an outside-the-box kind of question. So I think you have the background maybe provide me an answer. So if if there are advanced biofuels that can take up a much larger percentage, say the majority percentage of liquid transportation fuel demand, say algal biofuels, cellulosic ethanol, some of these other advanced biofuels that currently aren't on the scene, is there going to be a ping pong effect, do you think, between petroleum-based liquid transportation fuel and these other fuels? If it could be produced, for instance, if these fuels could be produced at whatever cost point the break point is, say algal biodiesel break point is $15 per gallon, and in 2022, that's the cost of a gallon of diesel fuel, and it's $20 a gallon. Is it going to basically drive the cost? Is the demand for petroleum going to be driven then more towards petroleum? Because those costs, is the cost of petroleum going to go down basically because the demand's going to
one thing. Okay, so
is there going to need to be a political side of this if we're going to transition to all renewables?
I'll explain mechanisms. I can't answer your question directly, but maybe I'll rephrase your question.
Okay.
With the advent of second generation, as they become commercial, and they will be commercial with a certain set of pricing assumptions, meaning they will be commercial with a certain set of assumptions about this, this bottom-up thing I just went through. That's going to be true for any supply, and of course, if the market is much higher, the feedstock will follow. If the price is much lower, the feedstock will have to retreat. But that is driven by what the market does to the price of these products. So back to the point here. If a bunch of second generation product comes online and it ends up being priced higher than either conventional biofuels in terms of cost or petroleum, what will happen? Will they not be purchased, or will I think my opinion is that if they're reasonable within the range, that that's one of the reasons that EPA created classes of RINs. There's 5 classes of RINs, actually.
Well, can I just rephrase the question?
So there's a special class for algal, for example.
But what if it's actually cheaper? My question is it going to drive the petroleum price down cheaper to the point where you still use up all the petroleum, one way or the other? You might use it up at a slower rate, but it'll still be price matched because they're still making hand over fist anyways. So it's going to be price matched. It'll be used at a slower rate, but in terms of the carbon problem and
I would say the price of petroleum will continue unless the volume available is huge. The price of petroleum will govern the market and continues to. One of the biggest challenges, something we didn't talk about, that's also a pricing issue.
But what if it's the renewables are the majority and they are starting to govern the market? Will the petroleum price then come down?
You mean if there's actually more barrels of renewable fuel available?
That's the goal, right? That's the ultimate goal. Is that eventually?
I just want to make sure I understood the question.
Yeah, definitely.
Well, then it would be fair to say that.
But all petroleum eventually, you get used up either way, though. It's not going to have an impact because it'll still match the price.
True, but what would happen is if there's a huge abundance of renewables available at a reasonable price, that people will stop drilling for new oil.
But people's demand is insatiable. That's my problem. That's my worry.
Maybe the energy that prices it, like the energy content probably.
But there's evidence recently to prove that that's, to contradict that, right? Because California demand's down for the 3rd year in a row. U.S.-wide demand for on-road fuels is down for now a couple of years. I don't remember exactly. I think California started that trend, like many trends. But it's definitely.
That's true.
Is that because of the price, though? I mean, like
the world demand is increasing.
I think
road fuels are really expensive now.
It could be that, and it could be just economic, and it could be people actually are trying to burn less fuel. Who knows?
Yeah, walking more, public transit.
Mass transit, yeah.
That's a difficult. You can really only speculate on that.
Well,
Fuel efficiency.
yeah, switching to electric, natural gas, and the fuel efficiency. I mean, there's all those things take that 1%.
There's a paradox called Jevons paradox. Have any of you heard of it? It's an argument, and it's applies in some cases and doesn't apply in other cases. But it basically argues that any improvement in efficiency will increase consumption.
Better roads lead to more traffic.
Now, all these things, you start with certain assumptions, and those assumptions are almost never true. But sometimes you see things happen, and then that validates your particular paradox, and you write a book.
That's like the inverse of the Malthusian theory, though.
Yeah. I wanted to mention one thing. One of the things I find very frustrating is that I have to deal with selling a product into a market where one day my price is good and the next day my price was bad, and I didn't do anything. Was selling at the same price. But because of what somebody else did, my price was bad. Now I know nobody has sympathy for that.
I do for it.
Sure, I do. Do the same thing.
Yeah.
Thank you very much, Atul. If there are any
Yeah,
other
thank
questions.
you. Yeah.
I had just one question about LCFS and what your thoughts were. You're obviously just starting this credit market now, hopefully. Do you think it's viable, or where do you think California's going? Is it going to lead the way, or do you have serious doubts that LCFS will actually
So I
move
consider
forward?
you all friends, even though I don't know all of you. I mean, many of you. But I'm treating you like friends in saying this. So I will deny it if you repeat what I say in any forum other than this forum. But I truly believe that, I'm still young, relatively in many ways, but since '94 I've been working with clean transportation. I've been exposed to what CARB and EPA has been doing in a commercial sense since '94. And I truly believe with friends like this, who needs enemies? I really do. I mean, CARB policy is so poor, and EPA policy is so poor. And yes, we all adapt, and we still do good stuff as a result of it, but it's despite that, not because of it. So, what do I think is going to happen with CARB and LCFS? Hopefully it's getting less stupid every day. I hope that some of these ridiculous carbon intensity numbers go away. I hope that indirect land use, which we all care about, we develop the science before we ram it down people's throats. And so that's what I hope. But will that happen? I have no idea. Will we figure out how to adapt as things change? Yes, we will.
Thank you very much.